G'day folks, it has been a mere year and a half since the fiance and I purchased a condo here in Toronto at the face-ripping interest rate of 5.8%. And I want to talk a little bit about my own personal experience because I am seeing nothing but negativity in clickbait articles across the entire Canadian housing landscape that really feels familiar to what we just saw with the stock market that crashed insanely on this tariff war. People are saying don't buy, it's going to keep dropping, and if you missed out on that opportunity, we are now up 15%. And I think the Canadian housing market is going through something very similar. I'm going to explain to you why with direct data points. So if you're on a path to financial independence, if you love talking about real estate, investing, and more, consider subscribing for future updates because Toronto real estate enters a bear market. Sales plunge as inventory rips. I mean, could you imagine just when you thought Toronto's condo market couldn't get any worse? Here we go. I mean, I'm going to read you a little story before we get into some data, but my financial life was turned upside down. Toronto homeowner stuck in a market shift. Now, you really got to ask yourself what you want to do personally in the housing market. I'm not here to invest. I'm here to buy a comfortable home. I'm looking for 2-bed, 2-bath preferably, and it was more affordable in the condo sector for us. And I'm going to break down kind of how it's worked out for us and why a higher interest rate didn't really affect us that much at all. But this story is quite concerning, and there's a few red flags in here that you should take into consideration for your own real estate purchase. But at 26, and we're talking about Jordan here, he bought his first home, a 1-bedroom condo in Toronto's King West neighborhood for about $600,000. He was a high school teacher and a coach. He says he was determined to build equity and eventually move into a house before turning 30. So first and foremost, red flag here, if you're buying a condo as a investment property to scale up to a house, you're better off looking for fix and flips, value adds, or something that can materially impact that value in a shorter term. Because 5 years is a very short time frame for an investment vehicle if you're 26. Well, actually only 4 years. But that was his goal nonetheless. But that dream began to unravel only a few months later. I bought with a variable rate mortgage and my financial life was turned upside down by the year 2022. I waited too long to lock in. Oh no, I was advised the variable rate has long been more competitive than fixed. Oh no, another victim to the fixed versus variable rate mortgage. Now, you got to keep in mind, if you're getting a variable rate, you could have any market impact that could drive the cost of the interest rates up. That's what a variable is. You get the best rate, but it's going to fluctuate based on whatever the Bank of Canada decides. So you got to make sure you're prepared for that regardless and have an emergency fund to deal with some of those impacts, or just switch to a fixed rate, which you might have to break a term. But Canada is actually very cheap for breaking mortgage terms to renegotiate interest rates. And I will say, remember, you can negotiate the price of the house, but once you buy the house, the only thing you're going to be able to negotiate after is the interest rate. So don't worry about the interest rate. Just make sure it plays into your affordable realm, because right now is a good time to negotiate on condos, and we'll get into that in a moment. But instead, interest rates surged after the pandemic. The central bank raised interest rates by 5% for 11 months in an effort to curb inflation, which peaked at a whopping 8.1%. This gentleman's monthly mortgage costs soared as a result, going up approximately $500 a month, and prompting him to lock in with a fixed rate due to fear. At this time, this gentleman took on a second job as a server just to stay afloat, working from 7 to 11 p.m. for months. At one point, he left the country to live in Australia for over a year so he could rent out the unit and pay his mortgage from afar. Now, 29, he's back in Toronto with his girlfriend, but they still feel stuck in the same unit amid a tepid real estate market. I don't feel bad for this gentleman because, again, like when you're looking at short-term returns, all that stuff, it gets really murky when you're taking on the risk of variable. Like, I get people were shadowed by the risk when we've been in a perpetual up real estate market for like a decade. But these things can happen at any time, and you need to be well aware of the risks. And unfortunately, your bank advisors do a horrible job at explaining the risk. And now these market news analysts are doing just as bad of a job steering you in the right direction if you are looking for a home, which is why I'm here to help you out. Not as financial advice. I'm just some financial clown on the internet. But again, if you're on that path to financial independence, if you damn well one day want to retire early, let's do it together, folks. Consider hitting that subscribe button, because the Canadian Housing Market Report, if you take the entire country and skew the information, which is what everybody likes to do, you'll see over the 12-month change, the average home price is down by 2.9%, but over the last month, it's up 1.5%. Probably because spring, summer's a hot time for sales, but annually, we're still seeing prices come down. So why? It has a lot to do with the different sectors of the market, and I'm going to show you sectors that are up by 40%. This is about to blow your mind here, folks. Take a look at this, because firstly, according to Zillow, the Toronto real estate trends that have been currently going on, we've actually seen Toronto housing prices up on a monthly by 4.2%, and on a yearly, mostly flat, but the average price is around 1.2 million. Again, broad stroking is not the appropriate thing to do. We'll start with the condo market, where a lot of this fear is kind of deriving from, and it has a lot to do with, firstly, the investment side of condos. We had just an insane surplus of foreign investors, people here speculating, buying pre-construction, trying to sell for profits as soon as they came to market, and they were shitty investment homes, studios and one bedrooms that were just garbage to live in, not comfortable at all. And over the 1 year, we've seen them go from like a studio from 415,000 to 377K, down 9%. One beds from 606 down 8% to 558,000. What you really want to look at is where people want to live. If you just ask yourself this really simple question: if I and my fiance, or me as in general, what is comfortable living? Well, probably 2-bed, 2-bath, right? It's hard enough to find in a condo as it is, but in general, most of us probably want to live in a decent, comfortable apartment. That's what we bought, a 2-bed, 2-bath. We got very lucky to find a condo like this. And you can see that the 2-bedroom apartments or condos have actually only corrected by 5%. Really not that bad at all. But then if you go to the other spectrum of speculation, the luxury market, where you start seeing 3-bedroom condos, you can see they've corrected by some of the hardest hit amounts, from 1.1 million to 885K. So what are we learning just from the condo market? People don't want to live in closets, and people also don't really want to buy luxury condos right now. So those are the two biggest points of correction. But if you bought something comfortable, you've seen hardly any correction at all, because that's where the demand is, right? And this demand becomes ever more apparent when we talk about townhouses. But before we do, let's do the same comparable for detached. Now, we didn't buy a detached home because I'm not dumping $1 million into a 2-bedroom house. In fact, our 2-bed, 2-bath condo costs significantly less than that, and it's way more comfortable. It's like 1,300 square feet, and I literally said I would move to Alberta if I have to spend $1 million on, an 800 square foot apartment, which is what they were trying to charge for these new construction builds, or a house. I don't care. I'm not looking to move up from this. I'm not using it as an investment vehicle. I just want to be comfortable in an affordable place. It's out there. I promise you it's out there. We had to fire one realtor to get there, and we looked at 100 properties, but there's no bidding wars. We had no bidding war. Right now, there's no real bidding war in some of these markets. So you need to understand that, and if you can afford to get in and the math makes sense, these numbers are going to show you why it's probably achievable right now. But firstly, 2 bedrooms are down 10% from 1.2 million to 1.1. That is expected. I mean, who can really afford $1 million home if you're like me? I mean, we're in our 30s now, we're millennials, and it's taking longer and longer to come up with deposits for homes like this. But I also want to invest and have a retirement, and $1 million home makes that pretty hard. But you can see 3 bedrooms. Comfortable living for families hasn't really corrected much, down 8%, which is kind of funny considering 2 beds have corrected more than 3 beds. But again, as we scale into the luxury side of things, these crazy 6-bedroom houses, they've corrected by 25%, which is just utterly staggering here, guys. So let's zoom in a little bit farther and talk about townhouses, because this is the median between people that want homes, don't really want condos, but can't afford a detached. And here we go. 1-bedroom townhouses, the thing most people would look for comfortability, over a year ago from 630K up 43% to $897,000. My God, if you're looking for fix and flips, value adds, the detached townhouses, baby, not detached, the townhouses is where that value could potentially be. 2 bedrooms up 24%. Up 1.2 million. If you bought a 2-bedroom townhouse over last year, man, you made some crazy returns. 3-bed, even up 5%. So this just really shows you what the average person is looking for, guys. And remember, you can always negotiate the house price, but once you lock that in, you can't negotiate it. But what you can negotiate after is the interest rate. And that's how the wife and I kind of looked at it, the fiance and I. We just said, hey, look, we don't mind if we put a larger deposit to dampen the higher interest rate, because we got a 3-year fixed. And guess what? We can always negotiate that, and it does not cost a lot to break that term. But even now, I think the rates are around 4%, and we're at 5.8, and it's not even worth us breaking with a year and a half left on our term. So we might as well just wait till the end of the term, right? But this data to me is just absolutely mind-boggling. When you broad stroke the entire market, you'll realize that the middle market still has value to go up, but it's the investment market that has been a complete joke, these studio closets, and then the luxury market, these have been correcting, bringing the entire averages down. But if you are somebody like me who just wants a comfortable place, an affordable place to live, you're now moving back into a more bullish market, because me and you aren't buying a $6-10 million home. Let's be real, right? So you got to understand the deals are about to go away, and they are. If you want a condo, now might be your last chance to try and find something that's a bit more comfortable. But interest rates have come down, guys, and regardless about how these clicks, these media that drive just from clicks are really manipulating your brain and your thought around the market. Don't go down this path. You're going to lose. I have gotten substantially wealthy through market downturns. Actually, the reason we were able to afford this condo was because of the pandemic. We invested in companies during the pandemic when the market cratered by 30%. And whoo, baby, did that work out for us. And I'm telling you, when these corrections happen, these are the opportunities for you to build wealth. And I'd love to know what you think, how you're navigating this market, and your feelings around it. And maybe I'm wrong. And if you think I'm wrong, I'd love to hear about it in that comment section below.